me then be here because this can move. The drawback is I cannot see you, but I can move the slides.
Okay.
So, well, that's how it is. You know, either
we can see
I can see you or I can see the slides. So.
Okay. Okay, we can start officially. Yeah?
Okay.
Hello, everyone. My name is Radostin Vazov. I'm associate professor in Homophobia University and the deputy director in our university. I'm extremely glad to welcome, on behalf of the name of our rector, Professor Vazov, Professor Milanovic, and thank him for accepting our invitation to participate in this webinar, which is the future of capitalism and inequality. I also want to thanks to all participants that expressed their interest in participating in this seminar. This event is organized by Homophobia University and is part of the events for celebrating 20th anniversary of our university. And now I want to give the floor to Dmitry Sebev, who is our lecturer and translator of the book of Professor Milanovic, Capitalism Alone. And I want Dmitry Sebev to introduce Professor Milanovic. But before to start with that, after the presentation of Professor Milanovic, everyone will have opportunity to ask questions by raising the hand. And after the discussion, if it's not possible to raise hand, you can write it on the chat. But we prefer to ask the questions live. And now, Dmitry, you have the floor.
Thank you, Professor Vazov. It's a great honor for me to present briefly our guest today, Professor Branko Milanovic, though I feel that in the brief online format we will lack the time even just to mention of his outstanding achievements and academic positions. First of all, yesterday, Professor Milanovic turned 68. So happy birthday to you, Professor.
Thank you very much.
Thank you so much that you spared time for us. As we all know, Branko Milanovic was born in the former Yugoslavia. He did his PhD at the University of Belgrade with dissertation on economic inequality and published the dissertation as a book in 1990. He is most known for his work on income distribution and inequality, and especially for his so-called elephant curve that shows that the lower earners in the developed world have missed out the real income growth over the last 20 years. In his book from 2016, Global Inequality, A New Approach for the Age of Globalization, was included by the Financial Times among the 12 top books of the year in business and economics. Professor Milanovic formerly was a lead economist in the World Bank's research department, publishing some 40 research papers, mainly on world inequality and poverty. Since 2014, Professor Milanovic has been a visiting presidential professor at the Graduate Center of the City University of New York and an affiliated senior scholar at the Luxembourg Income Study. He also teaches at the London School of Economics and the Barcelona Institute of International Studies. In 2019, he has been appointed the honorary medicine chair at the University of Groningen. And of course, his book, Capitalism Alone, The Future of the System That Rules the World, published in September 2019 and translated into Bulgarian, A year later, was included by Foreign Affairs magazine on the list of the best books of 2020. I can prolong this presentation of our lecture for long, but I think enough said about our honorary guest today. Now let us turn the spotlight to Professor Milanovic himself. And dear Professor, the floor is yours.
The microphone.
Thank you very much for such nice introduction. I'm actually very, as you know, I'm very honored and I'm very pleased that the book was translated in Bulgarian. I have received several copies despite all the problems with COVID. Actually, I found them in my office in New York recently when I went there. And of course, they look very nice. And as I said, I'm actually very pleased. I think it's actually my first book translated in Bulgarian. And actually, I had several conversations with journalists already. So I'm very glad about the reception. Now, for today, I'm also I'm delighted and honored to be there, although I would have preferred to be there in person, but given the situation that we are all facing, I think it might be probably another 6 months or a year until we can travel more easily. So now let me do a brief and partial presentation of the book, because the book has, as you will see in a minute, actually has several 5 chapters, and they are somewhat different, and presenting them each would really take probably 2 hours. But because we have about only 30 minutes, of course, I have decided to concentrate on some parts and to leave others out. So now let's see if this is going to work. This presentation. So can you see it now?
Yeah, we can see it.
You can see it. Okay, because this is the part that I cannot see you, but I can see my presentation. But I think we can continue. So this is, as I call it, a partial book talk, and I would actually focus in today's talk on what I call countries of liberal capitalism, or liberal and meritocratic capitalism. But I would like to say something towards the end about countries of political capitalism, where actually I'm using China as the key example, and I discuss China in many respects, and I argue that China is a capitalist country, which some people don't agree, but I actually would like to present a little bit of that part as well. The structure of the book is, as you can see it on the slide. I'm not going to read all of that. The introduction just essentially gives the contours of the post-Cold War world. And I argue there that there are two big changes. One is the quasi-universal adoption of capitalism as the mode of production in practically all the countries in the world. That's indeed a big change, not only compared to the situation before 1989, but even if you look at the situation before World War I, because you had large parts of the world that were actually either under slavery or serfdom. As you know, in the United States, slavery was abolished only in 1865, serfdom in Russia, 1861, slavery in Brazil until 1888. So capitalism was not alone then. And then capitalism was not alone from 1917 until 1989, but it is alone now. So you can see here the idea for the title of my book. The second thing, which was, specific or special to the post-Cold War period, is the rise of Asia. So obviously I will talk about that, including, as you very kindly mentioned, the elephant chart, which very largely sort of is based on the rise of the middle classes in Asia. So the second part I will actually present today, liberal meritocratic capitalism. The third part really deals mostly with China. The political capitalism term comes from Max Weber. And then in the last 2 chapters, I discussed the interaction of capitalism and globalization through different forms. Globalization and labor, for example. Globalization and capital, especially supply chains. Globalization and migration. and globalization and corruption. I think that last point is, or last topic, I think is interesting because I think globalization has also made corruption more easily simply because it has facilitated the movement of money from one country to another and ability to evade taxation. And finally, a few words about the future capitalism. That's actually a fairly short chapter, and I will not discuss it today, but it might actually come up in the questions and answers that you make. So I will skip some of the slides because we don't have that much time. So let me then define very broadly various types of capitalism, and then you will see what role they are going to play in my discussion of today's capitalism. So I start with very old-fashioned and classical definition of capitalism, which has two classes, workers and capitalists. But the important part is that these two classes don't overlap in terms of their income. So what you see on this slide is you see income level on the horizontal axis, and then on the vertical axis, number of people. And the important part is that the workers, as you can see, they have a distribution of income, of their wages, but their distribution basically ends before the distribution of capitalists begins. So in other words, capitalists, as you can see on this slide, are all richer than workers. Now, this is, of course, a simplification, but it is really a simplification that was very much in mind of Adam Smith or David Ricardo or Karl Marx. In other words, the two classes were divided in two ways. First, capitalists were receiving only income from property. They were not receiving income from labor. And workers obviously did not have any property and were receiving income from labor only. And the two classes did not overlap in terms of their income. You will see actually how the modern capitalism has changed that very dramatically, but to see how it has changed, it's useful to start with a simplified version of how it was in the 19th century. Different way to show the same graph is simply here to rank people by total income on the horizontal axis, and then the red color are people who have labor income only. As you see, they're not equally all poor. Some of them have higher incomes, and that's why the graph is going up from left to right, and then capital income then starts next. And you notice, for example, just to make it more realistic, I did capital income in something which looks like exponential function, because we know that capital income is much more unequally distributed than labor income. So you have, when you look only at capital income, you do not have that kind of a log normal distribution that is typical for labor income. You have an exponential, or also what is called the power law, Pareto's power law, so that the top of the richest capitalists are really many times richer than the average capitalist. So this is the income in the past. Now, to also simplify, how does the same story look in today's capitalism? And actually, I've used quite a few countries. I use in the book mostly the US data, but since I work with Luxembourg Income Study, which uses data from many countries, I have actually done the same work with a number of countries. And here what you have in today's capitalism, you have labor income again drawn in right. Again, you can see not everybody has the same labor income. Some people have lower, other people have higher. But what you notice in the very beginning of the income distribution among poor people, there is really no capital income. For example, in the United States, about 30% of the population have zero capital or zero capital income, or even a negative capital income, because their liabilities are greater than their assets. So they're actually having to pay every month. So this is about 30% of the population. Then you have everybody up to the 95th percentile who have most of their wealth or property in housing. And really the big time capital income, which is financial capital income, only begins at the top 5%. And that this very simple slide tends to illustrate that. In other words, you can see that the increase in capital income becomes very steep towards the higher portion of the income distribution. In other words, while the labor income still keeps on increasing, for richer people, it does not increase at the rate, at the pace with which capital income increases at the top of the income distribution. So this is a very simplified version of today's capitalism. Then, of course, I said, well, what would be a different type of capitalism that we could imagine? So this is an interesting case. So think about that a little bit, because it's something which requires a little bit of a combination. Imagine a society where everybody would have the same shares of labor and capital income. So in other words, if my labor income is 100 and capital income is 50, you might have a labor income of 200 and capital income of 100. So what you notice there is that the proportions between labor and capital are the same. Now, that does not mean that the overall income inequality would be zero, because we still have different amounts. So you have, in this case that I mentioned, you have 300 units, I have 150 units, but the composition is the same. I have, I think it was my example, 2/3 from labor and 1/3 from capital, and you have also 2/3 from labor and 1/3 from capital. So then you ask the question, well, that society really cannot be a class society as we used to define it, because everybody is a capitalist and everybody is a laborer, but not that income inequality is zero. So in other words, you can still have high income inequality in such a society, and that society would have everybody as a small or medium size or a large capitalist, and everybody as a low skilled worker and medium skilled worker or high skilled worker. So that would be something which I call homoplutic capitalism. And the word homoplutia, and I will use it again, obviously comes from Greek. I sort of made it up after talking to some Greek friends. Homo, as you know, means the same. Plutia means wealth, indicating here that everybody has the same wealth in terms of human capital and financial capital. So this is a short introduction. And now let me go over some systemic inequalities. We're now talking about the empirical part, systemic inequalities in liberal or meritocratic capitalism. I would very briefly want to mention that the words liberal and meritocratic, or rather the terms, come from the definition that was made by John Rawls in a slightly different context, where for him meritocratic does not mean, and I don't use it to mean, what in a common language means that it's something which is being deserved. For him, meritocratic meant simply that no person is treated legally differently from any other. In other words, it is a system which is different from the old-fashioned systems where you had nobility or clergy who had special rights. So nowadays, in any practically country, everybody is technically, formally is a citizen. So there is nobody, be it in the United States or Brazil or Bulgaria or Russia, nobody is legally not allowed to have certain positions. So that's what meritocratic in his terminology means. You might have still some societies, let's suppose Iran, where certain jobs are only reserved, for example, for clergy. That would not be then, in his term, meritocratic. Then the liberal means, however, that there are two policies that are being implemented to make equality greater. And these two policies are a policy of taxation of inheritance, so not to allow the transfer of wealth, of large wealth, between the generations, so to actually enable everybody to have more or less equal chance. And the second one is the importance of public education for the same reason that I just mentioned, so that actually everybody has a chance to have a very good education. So this is for the terminology. So now I will not read all these 6 different systemic inequalities, because I'm going to discuss them one by one, and you, I'm sure, have already read them on the slide. So let me then go through them. Some of them I will go very quickly. They are not part of my work, so I'm actually using other people's work. One obvious sort of change which has happened in capitalism in the last 30 years, including, for example, in the so-called transition countries, because there are numbers from those countries as well, is that the share of capital in total value added has increased. So you see here that share of capital in domestic value added for G7 countries. You noticed actually a significant increase from the 1970s to the 1980s. Now, if the total value added goes more to capital than in the past, as you see today, about 40% goes to capital, and in the past it was a little bit over 30%. Now, the question is actually, why is it a problematic issue? Well, it is problematic issue because capital income, as I was saying in the beginning of the talk, tends to be very heavily concentrated amongst the rich. So in other words, if you have the rising share of one income source that is very strongly received by the rich, then you have a quasi-automatic increase in interpersonal inequality. And I think this is the problem of the rising capital share. I wrote it here at the very bottom. The functional income distribution then leads immediately into interpersonal income distribution. So in other words, let's suppose that you want to stop the increase in interpersonal income distribution. But the functional income distribution, because the functional depends on the way that the economy is organized. It depends whether you actually have more machinery, more robots, more artificial intelligence, and fewer laborers. You cannot change that. That's actually given because, the enterprises follow their own incentives. They're not going to start hiring necessarily people if they don't need them. So then the problem for the government becomes, how do I actually stop this spillover effect from large share of total income going to capital into making my inequality greater? And I think this is one of the major issues that we face, and there are different ways, and I would actually come to that in a minute, of explaining how that can be dealt with. But I wanted to define the problem very clearly. And this is simply showing you why it is a problem. The Gini coefficient, which is the measure of inequality of distribution for capital, which is in blue, is very high. As you notice that if you look for the United States, the Gini coefficient is 0.9. If you look at UK, it's about 0.95. If you look at Germany, it's around 0.9. Norway, the same thing. So everywhere, the blue line, which is the inequality of distribution of capital income, is very much above the red line, which is inequality in the distribution of labor income. So this is the problem when you combine it with the rising capital share. That's why you have increase in income inequality between individuals, driven by essentially productive decisions that have happened in the companies, and driven by the fact that capital income is much more concentrated than labor income. And as I said, this is the case in every country. It is the case in China, it is the case in Taiwan, it is the case in Thailand, it is definitely the case in Bulgaria, it's the case in Russia. So we don't have any case where capital income would be less unequally distributed than labor. Then to make things more difficult, and I'm not going to go through this graph, which is a little bit confusing even for me, but here Ed Wolf, who had worked on wealth in the United States for many years, essentially shows that the thing that I already mentioned, that most of the assets of the rich are actually financial instruments, but the middle class has very few financial instruments, and the middle class has mostly housing. So if the housing prices go up, that's good for the middle class. But obviously, people have to live in these homes. So even if the housing prices go up, that's simply a paper profit. On the other hand, if the financial assets become more valuable, then, of course, you can realize these assets, and the rich, since they hold most of the financial assets, then have an advantage. And we actually see that, for example, this is the case of the United States, where about the top 10% have about 93, in this case, 93% of stocks and mutual funds. So in other words, 10% of the richest population hold more than 90% of financial assets. As I said before, if you were to include housing, then of course the situation would be much less dramatic. But when it comes to financial assets, meaning really essentially a stock exchange, bonds, and so stocks, bonds, mutual funds, and all of that, the concentration of such assets is very strong. And on top of that, this is a more recent work. On top of that, we now have some evidence that the rich, for a given type of asset, realize higher returns. Now, this is something maybe obvious, because if you think that if you just take, for example, 1,000 euro and go to a bank and say, okay, I would like to, save or to invest that, you are not going to get very much help in the bank. I mean, they would take your $1,000 and they will pay you maybe, I don't know, they will pay you maybe 2% rate of return if you're lucky, and that would be the end of the story. But if you go to the same bank with $1 million, then the situation is different. Obviously you have a power, and then they would actually look for more profitable vehicles, more profitable investments for you, and you would probably have a return of 7 or 10%, even adjusting for risk. And that's exactly what this slide shows. And that further obviously exacerbates inequality, because it means that the rich are receiving a rate of return on the same type of asset, which is higher, because the same type of asset means that it's simply the money. $1,000 is simply the money, the same way that 1 million is the money, but the size matters and the rate of return would be higher. Now I come to something which was defined for the first time in the book, in Capitalism Alone, and this is, as I mentioned before, I called it homoplutia, from the Greek, creating a Greek neologism. And the interesting part of homoplutia is the following, is that unlike the classical capitalism, and that's why I started with the classical capitalism, unlike the classical capitalism, now in an increasing number of countries, we see the top of the income distribution having people who are both rich in terms of capital and labor income. So what this graph shows you, it takes people who are in the top US decile. So this is like the richest 10% of the people in the United States. And then ask the following question. What percentage of that group, the richest 10%, would be also among the richest 10% by labor income, in other words, having the highest salaries, and would be also among the richest capitalists, in other words, having the largest income from property. And if you remember what we were talking about before, about classical capitalism, think of the capitalism in England in the 19th century. You had at the very top capitalists, but they would not have labor income. If you're a big landlord and a capitalist, you're not going to go and start working in a company. So these people would have zero labor income. So there will be no mixture between labor and capital income. However, in the modern capitalism, there is an increasing mixture between these two. And as you can notice here, in the US, practically 1/3 of the people who are at the top are also at the top by labor and by capital. So now we can ask, and I'll show you now for the other countries, and I will then put that as a question, whether it is something good or bad and how does it work. This is the same calculation for a number of other countries. You can see the country names on the bottom. Starts with Italy, when you have 27% of people homoplutic, the richest 10% being also richest capitalists and richest laborers. And then you go to countries that are more, how should I say, less advanced in some sense, where you have classical capitalism still in existence. And these countries are Mexico and Brazil among the data sets that I have. As you can see, actually only 8% of people there who are in the top are also in the top labor incomes and in the top capital incomes. Well, this actually makes sense, because if you have very rich capitalists in Brazil who own factories, they're going to manage these factories, or they will do nothing and find a manager who will do that for them, but they're unlikely to go and become also employees. And that's not the case in the advanced capitalism, where you, as you can see, actually more than a quarter very often, and actually in some cases maybe up to a third of the rich people are rich both in labor and capital income. So there are different applications which I just would very briefly explain about what homophobia means, the effects on inequality. But let me ask a question which I think is actually an important one. So is homophobia, quote unquote, good, or is it, quote unquote, bad? Now, it is good in many ways, in the sense that it really breaks the class structure that existed in the past. We talked about that in the beginning, where the class structure is very dramatic. You have rich people who are only capitalists and they receive all their income from capital, and you have middle class and poor people who receive all their income from labor. But with homophobia, we have rich people who are both capitalists and workers. So that seems to be good, because the class cleavage is no longer there, or is certainly much less strong than it was in the past. On the other hand, the problem is that you have created an elite that is not vulnerable to changes, whether these changes happen to the stock market, because they actually, even if the stock market goes down, they have high skills and high paying jobs. Even if for some reason they lose these jobs, for example, another financial crisis happens, they can actually use their wealth to survive very well. Then on top of this, they're actually able to transfer both financial wealth and educational abilities, because they invest a lot of education of their children, because they themselves are quite educated. And then they create something which may be an enduring elite over the time. And we do have an increasing number now of longitudinal studies that shows the preservation of the elites over time. And I think that becomes a danger. So in other words, to summarize, we might have reduced very significantly the class conflicts, but then the elite question appears. So for those students of economic history, economic thought, obviously the class conflict is very much related to the work of Ricardo and Marx. But the elite is very much related to the work of people like Mosca and Pareto. So this is kind of a situation, I think, that we find ourselves now. Now, as for homophobia in the United States, I did this work together with Jonathan Berman. You see actually that we find this rising line, which is the rising presence of homophobia in using different sources of data. You know, I'm not going to go through all of them, but there are three big sources of data in the US, and we find broadly the same result regardless of the source that we use. We also find that actually homophobia might account for about 1/5 of the increase in US inequality between 1985 and 2020. So this is obviously a very strong factor that is also pushing inequality up. I will skip this part because I want to go to the next systemic inequality, and we're really running a little bit of time. So I'm aware of the time. So the next one is one that was studied quite a lot, and it will not come as a surprise to you. It is the assortative mating or homogamy. In other words, this is a process whereby increasingly people of the same educational level marry other people of the same educational level and similar income levels. So this slide, which I think actually quite nice, it is from one of my graduate students, Nishan Tionzan, who actually did the following research. He looked in the 1970s and looked at the cohort of men and women of the ages between 20 and 35. And then he looked at the top of the income distribution for men and also for women and the bottoms. And then he said, okay, so let's say we take the men who are at the top of the income distribution, wage distribution actually, and whom do they marry? As you notice here, the red line is they are marrying women who are also at the top of women income distribution. The blue line, they are marrying women who are at the bottom of the wage distribution for women. So all of these women are working, so they are not marrying women who are outside of the labor force. We actually don't include them in the sample. But what you notice here is a dramatic increase in the assortative mating. In other words, the men at the top used to marry at equal proportions women at the bottom at the top. Nowadays, they marry women at the top 3 times as frequently as women on the bottom. And very same or even more dramatic change for women. Women at the top marry now 5 times more frequently men who are also at the top compared to the men at the bottom. And for them too in 1970, these are the cohorts always of people, for them in 1970, the probability was about 1 to 1. So that was another element of rising inequality. So that element also is ambivalent. Is this a good development or bad development? Now, it is a good development because it is the result of the rising labor force participation of women. It is the result of ability to choose your partner. So it is not like in the past that somebody had to decide whom you would marry. And actually, you have your preference. And very often people do have a preference to marry somebody who is very similar to them. It may be in terms of interest, maybe in terms of, knowledge and so on. But the bad part of that is that by definition, it increases inequality. If you have people who have high incomes marrying each other, it does increase inequality compared to the situation where somebody with high income would marry somebody with low income. So we have here another dilemma similar to the dilemma of homophobia that I mentioned before, is that you cannot take the certain phenomena which push inequality up and then just decide, okay, this is bad, I don't want it. They are actually, in some sense, they represent an improvement in terms of sociological, maybe, makeup of a society, but they do tend to produce greater inequality. So I will then finish. This is a complicated slide, which I will not explain. It is from political scientists, and the slide essentially shows that the rich people, the elite, of which I spoke before about homophobia, they tend to also control the political process because the political process actually represents the much more frequently the views of the top than of the middle class or the poor. So this graph, this line, essentially by going up, as you can see in these slides, shows you that the percentage of the issues that matter to the people at the top is generally much more frequently discussed in the United States, in the Congress, or in different countries. I had the same study seen for Germany in parliaments than the issues that matter to the poor. So you can imagine that there are some issues that matter to the poor. In the US, it could be, for example, the issues of homelessness or issue of food security and so on. But for the rich, what matters is really tax policies or, zoning. Well, the issues that matter to the rich would be much more frequently discussed in the political fora than the issues that matter to the poor. So I would then finish this because I would like to actually complete, and then just simply with a conclusion and with the policies to change it. So we can actually, as I was saying before in the very beginning, we can actually expect an increase in the capital income ratios, because this is what I called it systemic inequality, and really derives from the fact that we are actually now moving much more towards the use of machinery, artificial intelligence than in the past. That implies, in some sense, an automatic transmission to higher inequality. That higher inequality can be weakened by increased taxation of income from capital or wealth, so we can actually increase the taxation of capital income as a flow, or we can impose taxes on wealth. Many countries actually are very reluctant to impose taxes on wealth, although many economists suggest them, but people often don't like them. Another possibility is taxation on inheritance, which would not be the taxation of all inheritance. It would actually leave a large part of inheritance transmitted without taxes. But after a certain level of inheritance, you would have to impose, I think, high taxation. In other words, if you take people who are billionaires, there is really no compelling reason why these billionaires should be able to transfer all these billions to people who have actually done, their children, who have really done themselves nothing to earn these billions. So I think at some point you would actually have to start, and in the past that was the case when the taxation of inheritance was quite high. Another possibility is that you spread or what I call deconcentrate ownership of capital, which means that you give greater advantage to the middle class to own different capital assets, or that you have a taxation policy that would give advantages to the companies which distribute shares to the workforce, and not only, as they do now, to the CEOs and the top management. Now, I will finish with that. If this happens, for example, let me just see, if this happens and you have the distribution of shares to the workforce and you have deconcentration of capital ownership, then the first problem that we mentioned in the very beginning, which is the problem of transmission from high capital share into the higher interpersonal inequality, that first problem disappears, because you do not have in that case, or you would not have in that case, the Gini coefficient of capital income being 0.9, as you have seen in the slides, and Gini coefficient of labor being 0.4 or 0.5. You would really bring down the Gini coefficient of capital income, and the fact that the capital share is going up would not necessarily translate into higher interpersonal inequality. So these would be recommendations, if you will, at the end, of how to deal with rising inequality. Let me just make one last conclusion, so just to clarify what I had in mind. Essentially, if you want to deal with rising inequality, you have two options. One option is to focus largely on taxation of current income or taxation of wealth. The other option is to change the endowments. And the other option of changing the endowments means spreading education and making best education possible to everybody, and deconcentrating capital ownership. So you notice in the second case, it is the endowments of capital and labor that become more equally distributed, and your taxation policy in that case does not need to be very tough or hard, because more or less most people would have several similar endowments. So this is really the basic decision. I don't want to imply that countries have to do one or the other. They can actually do the combination. But ideologically, one has to keep the distinction between taxation of current income and more widely spread capital and education. So I would stop here. I didn't have the time to say something about China, but maybe in the questions and answers, I would be able to address the Chinese situation. So thank you very much for attention, and I'm back to being able to see you, and I hope you have been able to see me throughout the presentation.
Thank you very much for this interesting lecture. First, I wanted to give the floor to Professor Durankiev, but I see that he has a problem with his microphone. So the only thing that I can do is to thank Professor Durankiev, who sits behind this event. And later, if it's possible, he will join us to make his questions. And I see several raised hands. One is from Plamen Dimitrov. And after that, I want to give the floor to Dmitry Sebev. So, Mr. Dimitrov, you have the floor.
Thank you very much. Thank you very much for very interesting lecture of Professor Milanovic, and of course, I would like to raise my question. As you mentioned, the share, I mean the share of the workers in the capital income is one of the increase of share of the workers in the capital income is one of the mainstream to reduce inequality and to reach more sustainable society. And my question actually is in the same area. It just mentioned here that education, trade unions, taxes, and social transfers are weaker now than before. This is the situation. And what about trying to strengthen the education, as you said, to see how the unions, trade unions, could play a role in this process of increasing share of the workers in the capital flow, in the capital income, in fact, within the society, and to keep in mind that doing that, we have to also tackle the issue about the decision-making power. So only to have capital income from some shares or some capital instruments would not be enough, I think, to restore, to come back to the social peace instead of social conflict in the society in contemporary capitalism. So my question is, what is the role? What would be the role of trade unions having their one, of course, usual channels for trying to negotiate better conditions, collective bargaining to be strengthened, as the European Commission is trying to do their best in a new directive for wages. But on top of that, to see how they could play more, let's say, intensive role, as we see that 27% of what is it? I can't remember your name, but in the societies where the workers and let's say shareholders are in the same position or getting income both from labor but also from the capital, much more stronger within the European Union countries together with the US. So I really think that it's good. It would be good to elaborate on this issue. What would be the role of the unions? Thank you.
If you agree, actually, I would. If you agree, I would just answer very briefly each question, so that we don't need to combine questions. Is this okay? Because I think it's more immediate. But I will be brief because I know I've seen actually there are quite a lot of questions being raised, and we would like to have everybody. Let me say on the trade unions, I believe I'm actually not against trade unions. I think they should play a strong role, and as you said, collective bargaining and all that. However, what I do observe, and we all observe, that over the last 30 years, trade unions have become much weaker. And trade unions in all countries, even countries like Sweden and Germany, the share of trade unionization has gone down. And it's not because somebody was mean against them. I mean, legislation in the US has become a little bit against trade unions, but the main reason is that the organization of labor, as you know, has changed. You don't have any more labor in large companies with people same, interest. You have now labor, and increasingly with the way that we are now communicating remotely, you would have really dispersed labor. Dispersed labor, as you know, is very difficult to organize. So I think that the trade union decline is something which really will continue. And interesting fact is that in many countries, trade unions are now much stronger fighting the state than the private sector. Trade unions in education, in health, are very often strong, like in the UK, and the education and health are mostly public. So this is for the trade unions. Now, the second question that you raised is really a very good one, and many people raise it, and I'm quite aware of that, is that if I want to give shares to workers and the middle class, many people don't want to have shares. because they're actually not interested, they don't know to invest in all that. And I agree that there is a problem there. I do, however, think that if shares were given as a complement to wages, in the same way that many companies are giving shares as a complement to wages to their managers and CEOs, you might actually lead to the development of, what Margaret Thatcher called people's capitalism. So actually people would get more used to it. But I do agree with you that there is indeed a problem there, is that actually many people would just get shares and immediately sell them to somebody else and then spend the money. So yes, I agree that it is a problem.
Thank you very much for your answer. And now I want to give the floor to Dmitry Sebov.
Dear Professor Milanovic, thank you for your lecture. And me, as your translator into Bulgarian, I have, of course, a lot of questions, tons of questions for you. I studied your work thoroughly. I didn't agree with everything, being honest, especially with your thesis on the growth and on endless economic growth. But of course, this is quite another question. I have two questions for you. The first is rather a comment. So I was delighted reading your thorough analysis of Karl Marx. So you are using these concepts, his concepts extremely strongly, especially when analyzing the problems, the true problems of impossibilities of current socialism. Do you think that it is actually our, how to say, our familiarity with Marx as being Eastern Europeans gives us some advantage over the Western economists in general? The microphone, please. Professor, the microphone, please.
Yes, sorry. If you have a second question, should I wait for the second, or do you want me to answer the Marx question?
For the second question, it is rather, I should resort to some kind of sharing a graph. It's a graph taken from the World Inequality Database with Gabriel Zucman. You certainly know his work. I simply compared. Can you see the graph on the screen, please?
Yeah, it's visible.
Yes, thank you so much. It is actually a comparison of the distribution of wealth of Russia and the USA. Of course, you are using far more sophisticated databases, and I'm quite aware that you are hundreds of years, light years in front of all this. But anyway, I see here a strange similarity in the distribution of income between Russia and the United States. And now I'm asking you this question: could it be possible that we actually have a income structure, not of how you said it, of liberal capitalism, of Chinese or political capitalism? My compliment for this definition. Or we can see here a distribution of income of an empire, rather of wealth of an empire, of the American empire and of the Russian empire. This similarity of wealth distribution isn't coincidental.
Thank you very much for both questions. I'll try to answer them again briefly. The first question is very interesting. The question of the role of knowledge of Marx. I'm, writing currently. You will see the logic of the answer. I'm writing currently a book which looks at how important economists from Kenney, Adam Smith, Ricardo, Marx, and then Pareto and Kuznets thought about inequality. And I started actually having presentations. The most difficult chapters to write are about Marx and Smith. And I started presentations of Marx. And I found really that presentations are very difficult. And that goes to answer your question. Young generation in Western countries and Eastern countries too, former, really know almost nothing about Marx. So to present it is very difficult, because if somebody doesn't know what is constant capital, what is variable capital, what is rate of surplus value, what is the tendency of the profit rate to decline, you cannot in a presentation start defining everything, because then the whole presentation would be gone just in definitions. Then I send it also to people who are very knowledgeable about Marx. But there I got so many comments, because of course they're Marxologists, they study everything, so they would write, well, this statement was disproved by the 1968 article by Sherman published, when then the other statement, Macholsky disagreed with that in 1953. And so you actually get two groups that are so dissimilar. One is basically, hitting you like on every sentence, and the other one doesn't even know what you're talking about. And so that's what I found it very difficult. I have to say, for my generation of East Europeans, I have to say that the knowledge of Marx, I got to know Marx obviously at university, and actually all the main terminology and stuff, particularly because we are young, you remember them, and then I continued reading. I think it's a great advantage, because it's a powerful theory, and you can apply it. And it is wrong that they believe that it's theory that necessarily leads to an outcome, which is socialism, communism, and all that. It's a theory which is very sort of malleable, and you can use it differently. And I'm actually very glad what you mentioned. I did use it differently, as you know. I actually use certain parts, but I actually obviously disagree that communism is a society of the future. Going back to China, I actually argued that the communist parties and the left-wing parties were functional equivalent in China of what bourgeoisie did in the West. Because what they did, they destroyed feudal societies, and they made countries independent. So you see, I think it's a pretty, how should I say, it's a use of Marxist approach, but not Marxological approach. So I think that actually we do have certain people of certain age do have this advantage of familiarity, but I also unfortunately have encountered this either total lack of knowledge, which really does not allow communication, or an extremely specialized knowledge, which really also doesn't allow full communication, because it becomes communication among almost like sect-like, like Christian sects that were actually discussing tiny issues. So that was for Marx. I'm sorry, actually, would you mind repeating the second question just briefly? Oh, I didn't hear you.
I was just wondering, when observing the distribution of wealth in Russia and in America.
Yes, this is a very, very nice slide, and it's same. The situation is very similar also between China and the United States. China also displays features which are very similar to the U.S. features. China displays, for example, this homophobia that I presented today. It's present in China as well. The decline in social mobility in China, we are now for the first time able to measure that, is actually present. And an ultra-competitive educational system in China which exists, with parents, like the United States, investing enormous amounts of money, if they're rich, to make their children from the age of 2 or 4 already studying in the best schools and going to the university. And that system is partly private and partly public. And on top of that, you have, if you have read it recently, that Xi Jinping has now discontinued tuitions, tutoring companies that were charging enormous amounts of money. So what was interesting, tutoring companies were really basically like private educational system, because you needed to put lots of money into the private tutoring to make your child do well on a public exam. But you needed money to go for the tutoring company. No, that's not going to solve the problem. I've read that too, because rich people would now create their own tutors. They don't need to go to the tutoring company. They can just hire 5 tutors to come home. But anyway, what I want to say, there are very strong similarities, I think, actually, between the certain features of the distribution in Russia and the United States that you mentioned about wealth, for example, because, of course, Russian wealth inequality has skyrocketed, as we all know, after the transition, and also among among China and the United States. So maybe there are some, how should I say, modern society's features that transcend differences between political capitalism and liberal capitalism.
Thank you. Thank you for the answer. We have another question from the chat. It comes from Eddie Marinov. I will read it for the audience. Thank you for the very interesting presentation, Professor Milanovic. As your suggestions made me think of Amartya Sen's opportunities approach to development economics. I wanted to ask you if you think that the same patterns and trends of inequality and proposed means to fight them apply to the inequality among countries, more especially do the same determinants affect the increasing gap between the developed and developing economies, especially LDS?
I did not speak, and actually, I'm sure that Professor Sebev knows that, because, as you said, he has read some, additional work on not only the capitalism alone, for which, of course, I'm very grateful for the translation. Lots of my work actually originally deals with global inequality. So global inequality, in the most general terms, is inequality composed of 2 components. One is the inter-country inequality, which, because we work with individuals, has to be weighted by population, and inequality within countries. And what has been happening in the last 30 years before COVID, because COVID is now a very special force, so I will not discuss it, is that the high rate of growth of China and India has reduced global inequality through the between component. Because obviously China and India being very poor countries, and as they grow, they become closer to the rich world, and they bring lots of people. They bring together, almost 3 billion people. So that was shrinking the global inequality. On the other hand, within China and India, as we were saying before, you had an increase in inequality, and then you had an increase in inequality also in most rich countries. So that was a countervailing force. So in other words, you had within national inequalities becoming larger. However, between these 2 forces, the inter-country inequality has been dominant force, and then global inequality has gone down. My final point on that is, of course, that after COVID, because we have really now very complex developments between the countries, total developments that we never were expecting. You have continuation of growth of China, you have decline, very severe decline in India, you have also last year declines in the European Union and the US. But one thing which it is a longer term issue is the absence of convergence of African countries. And I want now to highlight that, because Africa is a continent with a high increase in population. And it's a continent that would actually become larger and larger in terms of people. And if there is no convergence, Africa would really become totally marginalized, which then in turn would have an impact on European countries, including Bulgaria, in terms of migration. So I think that this global inequality is not just numbers here and there. The global inequality shows us really what are the underlying political and social trends that we can expect.
Thank you for your answer. And we have another question from Professor Bruzarski. Do you think that liberal meritocracy in the modern Western world is slowly but surely mutating into plutocracy?
Yeah, that's an excellent question. I have that at the end of my book, when actually I discussed very briefly, because I didn't want to go into great detail. First, the possibility of some convergence between political capitalism and and liberal capitalism, but also plutocracy. And indeed, I think there are very strong elements, particularly in the United States, of plutocratic developments. Not only Trump, I think it is wrong just to focus on one person. That one person represented some forces. He did not come from the moon. He represented some forces which existed in a society. But gradually, you have a sort of, how should I say, emptying out of the meaning of democracy by the ability to fund elections and the fact that money becomes so prevalent both for the electoral reasons and for different policies. And actually, you have the cases, for example, of Amazon, who until I cannot remember 5 years ago almost didn't have any lobbyists. Now they're employing, I read, 500 lobbyists in Washington and spending some incredible amount of money. So the question you ask, why are these companies having lobbyists? So they're not giving them money simply because they just want to give the money. These companies are very tough. They're fighting for every dollar. So they're giving the money because they expect to get something. And the normal implication is that they do get something because they would not continue doing that forever. Likewise, when people give money to the politicians, they don't give money necessarily, I will give you this much money to do something. I think actually in less sophisticated countries, you often have this relationship between business and politicians where I give you, I don't know, 100,000 euro and you change something tomorrow for me. In more sophisticated bribery cases like the US, you are actually having a relationship which is much longer and where the delivery of money is not only for you as such, but for your campaign. And, I mean, it's illegal. Actually, the funny story, it's legal that you invite somebody for dinner and everybody brings you $10,000 or $50,000 for the dinner, and that's okay, And so I think this quid pro quo, which in some cases, in non-sophisticated cases, is very clear. In this case, is less clear because it's a part of a longer-term relationship, but it's nevertheless the same. And in that sense, I think there is a real possibility of a plutocracy. And final point, even if you look at Europe, whatever in the last 20 years you have had scandals, be it with Kohl in Germany or Sarkozy in France, it was always money and the funding of political parties. And of course, you had that in Bulgaria, in many countries. It is really funding of politicians, but really oftentimes funding of their political parties, not necessarily money only for them. They need to run and they need money. And I think that people who have money then have really an outsized influence on political process.
Thank you for your answer. I see that Avram Araf is raising a hand, so you can ask your question. Avram.
Hi, thank you for the amazing. Do you hear me?
Yes.
Hi, thank you for the amazing lecture. I just wanted to ask you, do you think that true equality is possible in real world scenarios?
I'm sorry, would you say it again because the sound was not very good?
Do you think that true equality is possible in real world scenarios?
No. True equality, if you define a true equality as basically everybody having the same income, I think it's not possible and it has never existed. So
more like everybody having the same right to achieve whatever income they're comfortable with.
That of course is a definition that is, I think, more acceptable. That's actually the definition of equality of opportunity. That I think that there we could come to a situation that it broadly is feasible. I have in mind countries with with high social mobility and low intergenerational perseverance of advantages. I think that Nordic countries are relatively close to that. I think also some Central European countries, like maybe, Slovenia, Slovakia, Austria. So yes, I think for that second definition, with a good public education, I think that, yes, we will never have exactly the same thing, but I think it is feasible, yes.
And now I have a question. You say if the liberal capitalism evolves in the direction of political capitalism, that we will need a really efficient bureaucracy, and this will lead to system corruption. Do you think that the corruption is the main issue for modern society?
Yes, corruption is, of course, a big issue everywhere. But in my discussion of political capitalism, and actually you alluded to that, I see corruption as intrinsic to that capitalism. I cannot say that I see corruption as intrinsic to liberal capitalism, despite what I said before about the plutocracy, because I think that fundamentally is something that, if there was a will, could be dealt with. You know, you can actually have public funding of the political parties, and lots of that corruption would disappear. But in political capitalism, where I have three definitions of political capitalism, starting with a sort of almost Weberian-like bureaucracy, which is efficient and whose objective is economic growth, basically. Then the second definition is the absence of the role of law. So these two things, if you put them together, create a contradiction. You cannot have a bureaucracy that is, in principle, going to follow the law and at the whatever is written, and at the same time, there is no rule of law as such. In other words, laws are applied in most cases when it's obviously there is no political reason not to apply them, but then in special cases, discretionary, they are not applied. And I think it is the contradiction between these two that leads to corruption, because this is the way that essentially the system gets corrupted. Because if I'm a judge, and if I'm a bureaucrat and I follow the rules, and there is a certain point when I'm being told not to follow the rule, that's actually corruption. Doesn't mean to be corruption only that I get money from that, but I get order from a political level that I should not follow the law. And I think that's why I see in China corruption as being intrinsic to the system. And that's why I mentioned that in the book. I see that if you do not have, from time to time, actions against corruption, as we have seen with most recent, actually started about 5-6 years ago, anti-corruption action, you would actually have, I use this metaphor, corruption is like a river. If you don't do anything with it, it's going to start flooding everything. So you would have like a sort of, what is the word, a swamp. You know, you would actually have the whole area totally being swamped. What I see the Communist Party of China, Xi Jinping, doing is they know they cannot get rid of corruption, but they know also, hope they will put it within the riverbed. And so they will do that, and I think in 20 years, they would have to do it again, because it is something which is, I think, intrinsic to the system. Let me just give you a small example. It's an anecdote I've heard from a friend who lived for 5 years in China. He befriended a judge, Chinese judge from Shanghai. And the judge told him, literally, in 99% of cases, I have zero political or other pressure. In 1% of cases, I have it. So, in 99%, you follow the laws, but 1%, you're told to be more creative.
Okay, thank you. And the last questions will come from Plamen Dimitrov. Really shortly, please.
Thank you very much for giving me the opportunity for a second round. And only one question. Actually, it's derived from the previous question about the equalities. That's feasible to achieve any kind of equality in the modern world. I would like to ask you, Professor Milanovic, would it be defined as a fair or unfair inequality? I have something to say on that, but we don't have time on that. And if you fight for fair inequality, then there are a lot of issues. For example, fair inequality is not only equality of choices, as some liberal economist says. The access to different opportunities, access to the same universities for the low skills and low paid part of the community as the highest level of the society. It's the same as a technology transfer. It's between the states. Now I'm speaking about the green and digital transformation. But if there are no equal access to the modern and the best proof green and digital technology as a country of my country, then the investments of the best technology will stay in Sweden or in Germany and is not going to come to Bulgaria or in Serbia. So what will be actually then the developments, economic, job development, but also the equality or inequality? Definitely unfair inequality. So this is the issue. We'll comment in this line. Yeah. Thank you.
Yeah, this is a super interesting question. Let me say something first about the technology transfer. I worked in the World Bank for many years, and one of the complaints that you would hear in the World Bank was that there was insufficient transfer of technology from the rich to the poor countries, and how actually the poor countries were oftentimes preventing from really employing technology better because lack of skills or corruption or whatever else. Well, now we have the case of one country, which is China, which has been super successful in sort of getting the foreign technology, using as a bargaining chip its own market, because as you know, the American companies were asked, okay, if you want to sell to China and produce, then tell us your technology. And it was not what is now called stealing technology, but it was not. It was simply using a bargaining tool. And actually, I think that we should see that as a positive sign, because it shows us that even poor countries, of course, they have to be large countries like China, but there will be a way to transfer technology. But what we unfortunately see now is a critique of the transfer of technology. So we would, next, as you were saying in your example, the technology for green energy or green development would remain in Sweden, and people would complain and say, well, we would like to send it to Bulgaria, but Bulgarians don't know how to implement it, and so on. Once Bulgarians implement it, they will say, oh, well, that's technology really, we are competing with you now, so we really want to keep it. So there is a very strong element of hypocrisy in this transfer of technology, which I think was revealed by China. On your first question, I'm really, this is not my field, because that's the whole field of, Amartya Sen, of course, is one of the people there, and John Romer, about, how should I say, ethical aspects or normative aspects of inequality. For me, John Romer, in that sense, maybe is the best example, because in his view, the situation is relatively simplified. Everything that has to do with circumstances, which means where you are born, from whom you are born, how rich your parents are, in what country you are born, are circumstances which are not which are unfair advantage or unfair disadvantage. Everything else which is related to your effort is your own, and these are the circumstances for which you should be paid more or less. And then finally, which is actually nice, he has what he calls the episodic luck, because of course we know that our income really depends on these three elements. One is where we were born, to whom we were born, and so on. Another is really our effort. And the third one is something which we cannot put the finger on, and it is luck. It's actually whether you met somebody, whether the job was opening on that day, or maybe it could have opened like 6 months later when you would be somewhere else. So nobody can adjust for that. And this is John Romer's, these three circumstances, effort and episodic luck, which I find very attractive as an explanation.
Thank you for your answer. And with that, I want to end the conversation and to thank Professor Milanovic for really interesting presentation and the answering all the questions. Thank you for the audience for all interesting questions that they give us. I hope this will not be our last meeting, and it will be really a pleasure for us to see you, Professor Milanovic, here in Sofia. And once again, I want to thank from behalf of our rector, Professor Vazov, to you for your participating in this webinar, and to thank once again to Professor Durankev, who made the contact and sits behind this event. Thank you all. Stay safe, stay healthy, and I hope that next time this event will be alive.
Yes, thank you very much for the invitation. Thank you for obviously translation of the book, for the attention, and I totally second your view. I hope that next time we would meet in Sofia in person. Thank you very much. I've been actually twice to Sofia, so it's not unknown territory to me, but I would be very happy to come again. Thank you so much.